Alright, good evening ladies and gentlemen. Welcome back to Compound Interesting. This is Emil, and in today's video we're talking about Big Daddy Bitcoin and why I believe this little fucker is going to go to $1 million minimum. And I will show you some numbers towards the end of the video that will probably shock you and make you also think that a $1 million price target for Bitcoin is a lowball estimate. So I hope this is probably going to be one of my best videos and one of my most important videos that I've ever made. It might be a bit of a long one, but I really hope you enjoy it. So with all that said, let's get cracking. So I think a good place to begin is to describe what I believe money is, or how I would describe money in as few sentences as possible. So for me, money is a storage mechanism for wealth, and it's also the measuring stick of value. So with those two definitions, Bitcoin would be the perfect money. Bitcoin is the perfect measurement tool, as its supply and its fresh supply and its total supply is 100% transparent. Everyone knows what percentage of the entire Bitcoin supply that they own. The measurement stick isn't changing sporadically like government money, like euros, that is just completely untransparently changing. The value of euros is changing, or the value of dollars is changing at the whim of central banks. Whereas with Bitcoin, the numbers of Bitcoin is completely transparent. So it's the perfect measurement tool. Although it might be a little bit volatile right now, but in the long term, it'll be much less volatile, and thus a much better tool to measure value. And the other way I like to describe money is a storage mechanism of value. And most people don't really want to invest the largest proportion of their money. Most people just want to be able to store their wealth, store their money/wealth. Another way to look at money, the last way I'll describe money is stored time. You might ask, how on earth is money equal to time? Money is equal to time because people like me, I have a job. Anyone who is willing to trade their own time for money, therefore gets money in return, so it's stored time. Then with that stored time, that money, once you have enough money, then you have all the free time in the world. So money, it is a storage mechanism for time. It's a storage mechanism for value, and it's a storage mechanism for time. And as we know, time is the most valuable resource on the entire planet. So we've established that Bitcoin is the perfect measurement stick, whereas with gold, the measurement stick keeps changing. But also Bitcoin is the perfect storage mechanism, because if you own one Bitcoin, you own one out of the 21 million Bitcoin that there will ever be, and you will always own that one Bitcoin of the 21 million Bitcoin unless you sell it. So the idea of there only ever being 21 million Bitcoin to ever be created is the first invention/discovery of true scarcity. With every other money that we've used previously, there hasn't been true scarcity. There's always been essentially unlimited supply. There's always more gold reserves in the ground. If the price of gold goes up, then gold miners will be able to invest more money to be able to get more gold. If central banks need more money because of the Rona or what have you, they're able to print more money, obviously very easily out of thin air. Alright, so now I've kind of described what I believe money to be. Now let's look at the characteristics of money very quickly. I'm just going to brush over these because I've talked about this before, but the characteristics of perfect money. So with the comparisons to gold and fiat being like dollars and euros. But we can see Bitcoin beats gold and fiat in almost every aspect except established history. It has a low established history, obviously only being 10 years old. Okay, if you want to go through those traits for yourself, pause the video and you can look those traits up. But I'm not going to go too into it at the moment because it will be too long of a video. But clearly we can see Bitcoin is almost the perfect money and is certainly better than gold and fiat. Alright, so I've described Bitcoin as the perfect store of value. And I believe, or I know, I'm going to share with you the numbers that there are well over $500 trillion in the world looking to store value, and only to store value. So I'm going to go through those numbers right for you now, but just so I can explain where I get the $1 million price point, what we need for Bitcoin to hit $1 million per Bitcoin is a market cap of 20 trillion, because Bitcoin right now is 60,000 and its market cap is at around 1 trillion. So 20 times that would give us that $1 million Bitcoin and that $20 trillion market cap. So $500 trillion waiting to get into Bitcoin. we only need 20 trillion to get into Bitcoin to reach $1 million. All right, so these are the way people, companies, organizations, central banks are storing their wealth and their time, their stored time, their wealth, their value right now. This is what the majority of people want, is a store of value. Where all the money is in the store of value. It's not in the medium of exchange. It's not in, well, it's also in investments as well. But most people and governments just want to store their value and be able to save in something that's not going to be deflated away. So we're going to go from the lowest amount of stored value all the way up to the highest. All right, in the United States alone, there are $2.5 trillion sitting on company balance sheet, just sitting in cash and cash equivalents. $2.5 trillion. 2.5 times the market cap of Bitcoin, because remember, Bitcoin's market cap is $1 trillion right now. So $2.5 trillion getting debased at a minimum 15% per year. Last year was 40% of debasement. So they printed 40% of all US dollars in existence were printed in 2020 alone. So before we get into the rest of the numbers, maybe I should just describe that CPI, like the inflation that the government tell you, is a complete lie. The 1 or 2% that the government is quoting as inflation right now is a lie. The reason being that technology is actually bringing the price and cost of everything down. Innovation is bringing the price of computers, software, everything down, while the money is being printed at absolutely extraordinary rates. So if there was no money printing, the price of everything would actually be crashing, and the velocity of money has gone to basically zero. So people can't be, like, companies can't be raising their prices right now because no one wants to spend the money that they have. So the velocity of money is zero. So that's why there is no inflation seen in the world right now. But I like to think in completely logical and rational terms. So if 40% of dollars were created last year, the money I have has become 40% debased. Trying to tell me otherwise is like trying to tell me 2 + 2 = 5. I will not believe you. If there's a pizza with 10 slices and I have one slice, and then the government takes away that pizza and gives us back a pizza with 11 slices and keeps one slice for itself. So now again there's 10 slices but one slice missing, and the government tries to tell me that I have the same amount of pizza. I'm not going to believe them. Anyway, moving swiftly on. Gold, $10 trillion sitting in gold. This is dumb Bitcoin. Gold is dumb Bitcoin. We saw in the traits of money that Bitcoin beats gold in every trade of money except established history. But anyway, I'm not going to get too in deep on why Bitcoin is better than gold. There's millions of articles and videos on this topic, so I'm not going to get into that right now. But I believe gold is dumb Bitcoin. I believe most of the wealth that's stored in gold, like not the like 40 or so percent that's stored in gold because of its industrial purposes, that will stay in gold. But I think most of the store of value in gold will move over to Bitcoin because Bitcoin is a superior gold by a long majority. All right, so the total money in the world sitting in banks, in circulation, in savings accounts, etc., is $80 trillion. So $80 trillion is sitting in banks, losing, as we discussed, a large proportion of its value as the money is being debased all around the world at a rate of about 15%. But yeah, as we discussed, 40% last year. Eventually people will wake up and realize that the money, if they have loads of money sitting in the bank, once the inflation really kicks in, they're going to want to store it in something that will actually store its value. But for day-to-day items, obviously they will need some amount of money in fiat currencies because you can't go buy your coffees with Bitcoin. But they will, in the long run, I think people will want to store the majority of their money in something, in a hard money, and then their day-to-day expenses in a soft money, like something that's more easily tradable in the real world. All right, so next up we have stocks. There are $90 trillion being held in global stock markets right now, and I think a large proportion of that is just as a store value mechanism. So the S&P 500 at the moment is being used as a store value, in my opinion, because as we can see, if you plot the S&P 500 returns versus the Fed's balance sheet, it is basically flat, which means in real money terms, in my eyes, what I believe, what I've explained to you earlier, that printing 40% of dollars has to make everything 40% more expensive. If you think like in that terms, in mathematical, logical terms, in my opinion, then the S&P has done nothing over the last 10 years. So all it has done has been a store of value. So thanks to Raoul Pal for coming up with these charts. Let me show you. The Nasdaq has actually beat the Fed's monetary expansion, so it is better than a store of value, but as I said, the S&P 500 is only really a store of value, and like 5% of all investments are in index funds, so a large proportion of that would be in the S&P 500. So all those companies that are doing less than 8% a year, that are growing less than 8% a year, you're losing value in them. So just so you're aware, in real money terms, you're losing value. So you need to be in the S&P 500, or you need to be beating it if you're an investor. And obviously we can see Bitcoin versus the Fed's balance sheet has been absolutely extraordinary. So at the moment, Bitcoin is still so small, it hasn't really become that store of value that we think in the end game, that's what Bitcoin's purpose will be a store of value. But because you're front running everyone, if you invest in Bitcoin now, you will gain value in monetary and actual value terms, because you are still extremely early in this movement. All right, so next up, this is when the big money starts getting whipped out. So there are $253 trillion in debt in the world right now. So that includes bonds. In my personal opinion, about roughly 100% of bonds are losing value in real terms if you count monetary expansion. So there are $253 trillion losing value every year that is supposedly in store of value assets in bonds right now. There are even some bonds that are actually negative yielding, which I'm sure many of you are aware. If you give 1,000 euro, they will guarantee to give you back 900 euro in 10 years. I don't know who in their right mind is buying those bonds apart from governments, basically only governments. But I think a lot of money, once Bitcoin becomes a large enough asset, a lot of the money that is stored in bonds right now could move into Bitcoin, but it won't be moving into Bitcoin anytime soon, in my opinion. So you really have an opportunity to front run these people who are just looking for a store of value. $253 trillion. Governments who want to store value, banks who are lending out money to individuals, or individuals who are buying bonds, etc. A lot of them are looking for stores of value, and if they haven't already, they're going to wake up that they're getting their money stolen from them by lending out their money for any sort of return that's less than 10%, which they all are. All right, so the final place that people are storing their value is actually in real estate. So there are $280 trillion stored in real estate right now. Although, yeah, $280 trillion, not all of that is store of value. Probably the majority of it is people actually buying the houses to live in, or buying the shops to have a shop in. But at the same time, people buy a house because they want to pass on the value to their children. People are buying houses in London. In Vancouver, the prices of houses for like a crappy little house are in the millions for a really small house in the suburbs of Vancouver when I was living there for a while. So the wealthy Chinese are buying up these houses because they know those houses will store their value over the long run, and it's somewhere out of the peer view or the control of the Chinese government. And what do you think is another way that you could potentially circumvent the Chinese government if you're a wealthy person and wants to store their value or take their value with them outside of the control of the Chinese government? Yeah, I don't really need to tell you, do I? So all those different store of value mechanisms adds up to $715 trillion of money that is in store of value assets. So even if we could imagine that 1% of that $715 trillion floated into Bitcoin, that would give us $7 trillion, which is 7 times the market cap of Bitcoin right now. However, we know for every $1 that goes into Bitcoin, it increases the price by at least $4, because Bitcoiners don't want to sell their Bitcoin. And historically, I've seen estimates of for every $1 that goes into Bitcoin, it raises the price by $20. But let's just stick with the more conservative amount that for every $1 going in, it raises the price by $4. So even if 1% of that $715 trillion goes into Bitcoin, that's $7 trillion multiplied by 4, that gives us a market cap of $24 trillion, which is well over $1 million per Bitcoin. Now, can you even imagine if 10% of that 715 trillion decides to move into Bitcoin? That would give us a Bitcoin price well over $10 million for just 10% of the store of value mechanisms right now. And that's not 1 million, and that's not 10 million in future terms. That's 1 million / 10 million in today's terms. In the future, it will be, if we factor in inflation, it will be a lot higher than 1 million for 1% coming in. It will be, 3 or 4 million. And then, yeah, the the 10% would be like in the tens of trillions. But obviously this is going to take a long time for this to happen. It's not going to happen overnight, and it's not going to go up in a straight line. If you've been in Bitcoin or cryptocurrency for more than a few days, you'll realize that it's very volatile, but it is getting a little bit less volatile with time. However, it's not going to go up in a straight line. But if you have a long-term time preference or long-term time horizon, someone who's held Bitcoin for 4 years or more has never lost money by buying Bitcoin. Even if you bought in the 2 weeks in 2017, where the perfectly wrong time to buy Bitcoin, when it was like 15 to 20,000, it only took 4 years for it to eclipse that price again. So I believe that will happen long into the future. If you have a long-term time horizon, you will always be able to store value in Bitcoin, and to have for the next few years anyway, you will actually markedly beat the inflation rate, in my personal opinion. But obviously this is not financial advice. This is just what I'm doing. This is what I believe. This is why I have the majority of my wealth in Bitcoin at the moment. I really hope you enjoyed the video. I hope you learned something. I would hugely appreciate if you could smash the thumbs up button. That would mean the world to me. Subscribe if you haven't already, and have a great day, and hodl on.